Okay, guys, here goes nothing. This is not scripted. I am not trying to invoke fear. I'm actually trying to calm people down. So, number one, I'm not giving medical advice. I have no clue if this coronavirus is all hyped up, if we're all overreacting or what. But I will tell you, I'm going to address both veteran consumers, any consumer for that matter. Share this video. If you know someone that's working on a mortgage right now or wants to refinance, just keep watching. I'm going to try not to go too far left or too far right, but just speak clearly. First of all, like I said, I don't know what to tell you other than, of course, wash your hands, drink lots of water, and make decisions on your own with your family. There's lots of information out there that you can get on the medical situation that might be coming or perhaps is already here. Lots of things changed between yesterday evening when the president addressed the country and NBA season was canceled, the NCAA, even though right now they're saying no live spectators other than friends and family, mark my words, that's going to be canceled. I had some family that had 25 great tickets to the NCAA wrestling championships. That's going to be canceled. They've already said no spectators. La Liga over in Spain, which is a massive professional soccer team, what just popped up. Okay, I got to stay focused here. But look, we are in a very eerie time. Here's how it's wreaking havoc on the mortgage industry, okay? Number one, I have never, ever in my experience in the mortgage world, and it's been for over 20 years, seen such a disconnect between mortgage rates and treasury rates. Let me, for example, show you. Green is good, like you see right here on my screen. Green is good, red is bad. I'm just keeping this simple for people. The 10-year treasury, lots of people are dumping money into the treasury. It's pushing the treasury yield lower. That almost always has signified lower interest rates for mortgages. Even though there's not a direct correlation, as we've talked about in the past, there is a correlation. And as treasury rates go lower, interest rates go lower. In just 4 to 6 days ago, the national news media, mortgage people like me included, were saying there has never been a time like this in our history. Interest rates are at their low, and line up, because if you have a mortgage, you are going to be refinancing. Well, that happened. And since that happened, everything has been flipped upside down. Okay, keep listening. This is not a justification if you're a borrower at low VA rates or at another company that's being told, hey, you weren't locked in, or we can no longer do what we thought, or you're not going to close for. We're seeing people with applications at competitors who are making them lock in for 90 days because the industry has no clue how bad this is going to get, and they can't keep up with the applications. I'm going to take my eyes off the camera for a second and read an email, okay, that I got this morning from our lock desk. That's who locks our interest rates and does all the behind-the-scenes magic, if you will. They got this from some pretty smart people. You can also find it on Bloomberg and HousingWire.com. I'm just going to read it, okay? Rates for the 30-year U.S. mortgages rose from a record low as overwhelmed lenders lifted borrowing costs to curb an onslaught of business. The average rate was 3.36 last week, which was the lowest in 49 years of data keeping at Freddie Mac. It's up from there, okay? I screwed up a little bit. Hold on. The average rate was 3.36, up from 3.29, okay? So it was as low as 3.29. Now, that may not seem like a huge jump. It's a big jump in such a short period of time. Interest rates should not be going up. It says that's not what's supposed to happen when markets in turmoil and treasury yields, which I just talked about, are hitting record lows. But these aren't normal times. Somehow, some way, mortgage rates are actually moving higher this week, said Matthew Speakman, an economist at Zillow. Some are speculating that lenders may be artificially buoying advertised rates in order to stem the rising tide of refinance activity and simply keep up with demand. Okay, and then the article goes on. I'm going to tell you right now, for example, we don't set interest rates here at low VA rates. I mean, we can, but we haven't changed a thing. And I've got loan officers, employees all throughout our organization wondering why in the world are interest rates getting worse. I've got all these consumers that are in line to refinance. I can't tell you why. There is a huge economic disconnect. Let me take you somewhere real quick that I want you to watch this video from Jim Cramer. Now, I've watched Jim Cramer for years. He predicted before anybody else the housing collapse. I'm going to show a short clip there. He's saying something very, very similar. He was famous for saying they have no idea. So watch this. Okay, here we go. This might be a bit loud, but I want you guys to be able to hear it. You can also find it just by Googling. He has no idea, Jim Cramer, 2007. But watch this.
Has no idea.
Kramer.
I have talked to the heads of almost every single one of these firms in the last 72 hours, and he has no idea what it's like out there. None! And Bill Poole has no idea what it's like out there. My people have been in this game for 25 years, and they are losing their jobs, and these firms are going to go out of business, and he's nuts! They're nuts! They know nothing!
Kramer.
Okay, now that may have seemed somewhat intense. This is him today. A little bit more reserved, but that they have no idea. He was talking about the Federal Reserve and all the other government leaders on what was coming with the housing collapse, okay? So let's wait for this ad to run, and then I'm going to show you what's going on now. Okay, guys, so here he is this morning when the Dow was set to drop 1,000 points. It's down over 2,000 right now, so listen up.
Avoid that chapter that we had early on during the crisis, Jim, where there was a stigma in asking for help and admitting that you needed help.
Right, so we have to get rid of that. Now, fortunately, the rates are so low, we can do this. We can be the strongest country on earth if we...
So, guys, I paused the video for a moment. When he talks about rates in this video, he is not talking about mortgage rates. Keep that in mind. That's that confusing disconnect that nobody can explain. He's talking about the rate at which businesses can borrow money from the government by borrowing against the Treasury. Federal funds rates, banks borrowing money to stay in business. They're super low, which is a good thing. He is not talking about mortgage rates, but what I want you to get out of this video is he's basically, what's the word I'm looking for, suggesting that we are going to likely be in another situation like we were during the housing collapse. And I don't say that to cause fear. I say that to let you know your chances to refinance at historic lows are not gone. We just need to be patient, and I'll talk more about that here in a minute. So listen up.
You know, everyone owes the government at all time. Everyone in this country, individuals, corporations, that has to be suspended right now so they have more money. Are these radical actions? You bet they are. Can they be done smoothly? Absolutely. Are we going to sit here and let so many companies go bankrupt because of an illness? I think that is stupid. This is the time for radical action, and the action can be done by the federal government. Once we settle that out and stop worrying about money, we can worry about health simultaneously. Right now, we can't do both. I see a number of companies in the S&P 500 that can easily go bankrupt in the next 4 weeks. Does that make any sense at all? No. We do not want to reformulate any corporation, let alone the large corporations, because they cannot get paid. How do you make an airplane with so many suppliers when the suppliers, this is, of course, the largest export we have, when people at the suppliers, of course, get sick? The federal government could tide us over here. I don't want everything closed. I want everything to work smoothly. And the only way to work smoothly is to take advantage of what the rates are and for the federal government to borrow as much as possible and then give it to us. This can be returned after we get healthy. Do we want to come in here every day and see which CEO is taken down by this illness, how many workers are taken down? No. What we have to do is be able to say, you know what, no matter what, the country will keep running because money is not a necessity at this time.
Have you seen any signs at all from our leaders in Washington and this administration that they
Listen
think
up.
the problem is as significant as you think it is?
Absolutely not. They know nothing. They know nothing.
Right.
We know more than they do. And that's not acceptable.
So basically, guys, that's a call coming into my watch. I muted my phone. If you heard all the beeping, it's an alert from basically interest rate people around the world. These are some experts that we pay money to get info on, and that's been blowing up for the last 3 or 4 days about what's happening with rates, and they're trying to guide, and there's almost as much uncertainty and panic in interest rates as there is in the media around this coronavirus. So let me tie all this together. Why am I telling you this? Number one, here at Low V Rates, we educate. If you've followed us on YouTube, if you haven't, you need to. Go subscribe. But if you have been following us on YouTube, we take great pride in that we're educating everybody, whether you're our client or not. Sorry about all the bells and whistles. Let me try to turn down some volume here now that that video is over. Let me tie this all back together for you guys. Number one, there's so much uncertainty in the market that nobody knows where to price mortgages. Let me read a text that just came in while we were doing this, and this is from an insider who I am friends with, who really knows his stuff. He works in the industry. I asked him to try to make sense of why interest rates were getting so bad, mortgage rates. He says, panic. Everyone is panicking. People with billions of dollars under management have no idea. That's the coined phrase today, right? No idea. They know nothing of where to put their money. Hedges are unraveling and all going to swear word. You can put whatever words you want in there. That is my assessment. I don't think anyone really anticipated that they would close air travel from Europe, which essentially prevents all Americans from traveling to Europe. Because if they go, they may not get home. The NBA is suspending their season. Major League Baseball may be next. During Trump's speech, the futures market hit a circuit breaker and shut down. Congress has closed all buildings to visitors. The U.S. health officials are saying the system is failing. Oh, and as I text, Major League Baseball just suspended their season for 30 days. Guys, this is happening in real time. So if you want to know why interest rates aren't as good as you thought they'd be, or why your loan officer can't give you what he was telling you or she was telling you they could do just 3 or 4 days ago, because mortgage rates and lenders are changing as quickly as everything else. I was supposed to be flying to Denver tomorrow morning with my daughter to a dance convention. It's a daddy-daughter dance convention that the dads take their daughters to. We do it every single year. We were all wondering, should we cancel? Should we cancel? It's not happening tomorrow. Everything's being canceled. Understand when that happens, there's great uncertainty on where we go from here. So what do you do as a consumer? If you just say, screw it, I'm not going through with my mortgage, you are going to regret that. So listen up. There's no reason to lock your loan in right now, but there is absolutely every reason in the world to get yourself to the front of the line, because when the gates open back up and we settle down and come back to reality, interest rates are going to be absolutely rock bottom, below the basement floor low. But if you're at the end of the line, or you have to start from scratch, you're not going to be in a good position. You do not have to close your loan until the terms are the way you want them. What I am suggesting is you get your loan into processing, you float that interest rate lock, and you stay communicating with your loan officer, whoever that is. Of course, we hope it's us at Low VA Rates. We use texting and emails and phone calls, and we will stay in touch, because a window is going to open, and then it might close again, and then it's going to open, and there will be opportunities when the dust settles and people come back to a normal way of thinking to lock those loans in, and you'll be at the finish line ready to go. We can get a loan all the way ready basically for closing and not do anything until you give us the green light to lock, and you'll figure when that time is right by communicating with your loan officer. So the world has changed temporarily. It will get back to normal. I'm not being naive. I was there when the housing market collapsed. I was there when the dot-com bubble burst, okay? I've been doing mortgages since 1997. Everyone thought the world was going to end when all the dot-coms went bankrupt. The stock market plummeted in Alan Greenspan. Most of you don't even know who that is. He was a Fed chairman 2 or 3 back. He started slashing interest rates a ton, like 19 or 20 times in his time as the Federal Reserve chairman. Okay? I was there when the housing market collapsed and the mortgage bubble popped. The Big Short, if you haven't watched that movie. I lived through that. We saw very similar situations then, and we all thought the world was ending, just like Jim Cramer was screaming about. It came back, and it's been an amazing ride up for those that have been in the market. Well, here we are again about 10 years later. We are in the midst of uncertainty. That's going to shake things up economically for a little bit. But in uncertain times, when the dust settles, interest rates are always low. So stay focused, work with your loan officer, and keep your mortgage going, or you will regret it. Thank you for watching.